Let's talk to Jim Perry, founder and CIO of Perry International Capital Partners. Jim, thanks for joining us. Appreciate it.
Good morning, Dan. Thanks for having me.
So, I guess first your reaction on the jobs number, and then address what Larry Kudlow said, sort of from a macro perspective on where you think this is going. Because if what Kudlow said is true, and if the tax relief and the spending restraint do materialize in some approximation to what was promised, then we may have seen the market low.
Right. So two things there. We'll get to Larry Kudlow in a second. And since it's non-farm payroll Friday, we'll talk about that very briefly first. The jobs report was better than expectations, right? And, 177,000 jobs versus 185, a little bit of an improvement. And as you and I have talked about, Dan, for many, many quarters and years, the non-farm payroll number is typical of the government statistics sort of initiatives in this country. They're woefully inadequate. The official jobs numbers in this country, the labor market is 160 million people, which is an all-time high, by the way, well above pre-pandemic highs. Unofficially, the labor market is actually 20 to 25 or 30 million people higher than that, right? The official number is people who, sort of pay taxes and have a Social Security number. So you've got 20 to 30 million people in this country working part-time for cash, and they are consumers, right? They are spending money. And I think the unemployment rate at 4.2%, you've never had a recession with the unemployment rate at these levels. I think you haven't had a recession until unemployment was sort of like 6%, right? So the unemployment rate is good. The labor market is very, very strong. And if you know the labor market in this country, you know GDP. And the fact is that personal consumption, as everybody knows, is about 0.75% of GDP. And sort of dovetailing into Larry Kudlow's comments the other day, the real GDP number was minus 0.3%. All right, so call it flat, right? Now, the bottom line is that the only reason it's flat is because imports in the first quarter jumped 14%, right? And this is on the magnitude of, $1.2 trillion worth of goods, right? If that number was normal, like sort of 2% or 3% or 4%, GDP would have been up 3.5%, right? So the GDP number is skewed because of the amounts of imports that came in at low prices, by the way, before what people perceive to be higher prices in the quarters ahead. So again, personal consumption, 5.7%, right? Business investment, 5%. And inflation is running at, 2.25%. You're talking about real after-tax growth in this country at over 3% in the first quarter. And I said this on my weekly 4 days ago. I think the first quarter GDP number is going to be the lowest of the year. When you look at what's going on in this country, the transformation of going from a government-driven economy to a private sector economy, the productivity levels in this economy are going to do nothing but improve in the quarters ahead.
So that then just to put a fine point on it, if the big, beautiful bill turns out to be something approximating what was promised, then and you start to get some trade deals rolling in, and there's some reason to be optimistic about that based on what we heard this week from Bessent and Jameson Greer, then you're looking at 3%, 4% GDP growth and a market that rebounds over the next couple of quarters.
Yeah, the highs of the market were kind of mid-February. 6,147 was a high in the S&P. The low was about April 9th. That was in the low 5,000s. We're up 7%, 8% from the lows this month, right? April's going to be a positive month. It was a positive month for the major indices. The stock market is still expensive. It's selling at 22 times earnings, right? It kind of dipped to about 21, a month ago. The point is the stock market and the bond market and the FX market are telling you a much different story than you're getting from the mainstream media. Everybody I see, you look at these guys, on CNBC, the only one that's got a brain on that program is Rick Santelli. But, it's a market-driven market. It's a data-driven market. And the data behind the market is really quite strong. Corporate earnings in Q1 are probably going to come in at plus 10%. This is not recessionary stuff, right? They were 12% in the fourth quarter. So 10% in the top quartile of earnings reports over the last sort of, 10 quarters or something. So the economy is doing well. The employment market is doing well. The labor market is big. Personal wealth in this country is at all-time highs. And, are there sectors that are weak? Sure. Anybody that's really dependent on cheap stuff from China, retailers in particular, they're going to have to kind of adjust a little bit here. But small businesses in this country are hiring. The people that are hiring are getting hired, are spending, and I think the economy is in pretty good shape here. Now, we have to worry about some of these initiatives that are coming in, to your point. So as far as the budget's concerned, that's one of 5 really big deals that, the president has been talking about for a year. Lower taxes, deregulation, spending cuts, reduction in the trade deficit, and resetting national security with respect to the southern border and containing belligerent China. These are 5 or 6 major points, and I was just over on a business trip to Europe for 2.5 weeks, and, I probably had 50 meetings, 40 meetings, something like that, and every single one of them, 75% of the time that we talked, was about this sort of hyperbolic, emotional, hair-on-fire tariff issue. And, again, I was in Europe, so, they're in the crosshairs of it, but this reset to fair trade is going to disrupt a few industries and a few countries in the short term. But at the end of the day, you bring $500 billion off the trade deficit in the next 6 to 18 months, that goes directly to GDP, right? You cut spending at the government level, $250 billion, maybe $400 billion, $500 billion, that goes directly to GDP, and productivity in the private sector is going to go up. So the stock market, the bond market, and the FX market is telling you that the economy is doing just fine.
The business investment numbers that you mentioned, Kudlow mentioned it as well earlier in the week. Yeah, pretty strong. Trump is touting, every major company that commits to making a major investment in the United States. But the countervailing point is, well, everybody is on the side, not everybody, but that there's a lot of money on the sidelines because of the uncertainty. So, net, it seems like based on those numbers that came out this week, net, you still have a flight to quality that, and a belief by, those entities that have big CapEx budgets that America is where you want to be, and the uncertainty will work itself out ideally as soon as possible, but we're still betting on America.
Yeah, that's exactly right, Dan. I've been doing some traveling, but, just to your point, you look at a company like Google, right? One of these big cap tech stocks. These guys are going to spend $50 billion, $100 billion on AI. All 7 of them are. AI spending this year will probably be $1.5 trillion, something like that. And, the only story that you see on the headlines is Apple, who reported yesterday. Well, Apple says, oh, my gosh, tariffs are going to cost us $900 million, right? I'm like, $900 million? That's a rounding error. I mean, just take it to $1 billion for a second, $900 million, right? The revenues that Apple had in the first quarter were $95 billion. They're up 5% from the quarter before at record highs, right? And their profit margins are $25 billion, which is an 8% increase over last year. And Google's the same thing. Google reported last week their revenues were $90 billion, up 12% on the quarter, and net profit was $34.5 billion, up 47% in Q4, right? So these companies are making a lot of money, and they're hiring a lot of people, and they're spending out on this AI revolution, and it's driving the economy. And on top of that, the government is supportive of it. They're spending money on semiconductor stocks and energy stocks and build-out stuff. So I think the economy is stronger than it was pre-pandemic by quite a bit.
Do you see a rate cut coming from the Fed in the near term then, if this bears out as you're suggesting?
No. The Fed meets on the 7th. I don't know what the market expectations are a little bit. I mean, I think when you watch the TV news, everybody's saying the stock market's up because expected rate cuts, 3 to 4 rate cuts in 25. I think that's nonsense. I'm an interest rate guy, right? I was a bond trader the first sort of 8 years of my career, then moved on to the strategy side. But, if you look at global liquidity, you've never had a recession when global liquidity is this high. I mean, the GDP is at $30 trillion. Money supply is $25 trillion, right? I mean, these are huge numbers. There's $10 trillion in money market accounts. Almost $4 trillion in excess bank reserves right now. The Treasury Department's sitting on about $3.5 trillion. Real money supply is almost $30 trillion. There is so much liquidity in the system, the Fed doesn't need to stimulate, right? 10-year Treasuries are at 4.25. 2-year Treasuries are at 3.75, right? So the Treasury bond market sees not a recession, they see lower inflation, and that's going to be good for the entire economy, So I'm bullish on the economy.
Clearly. No, it's encouraging. Let's hope Jim Perry is right, as he often is. I would even say usually. James Perry, founder, CIO, Perry International Capital Partners. Jim, thank you as always. Appreciate it.
Dan, before you go, happy birthday and have a good weekend.
The birthday week continues.
Oh, gosh, thank you.